What's up, guys? It's your boy GRC. I'm in the studio just like every day, 11 a.m. Eastern. We come to you live. Let's get straight to it, guys. We got John Wick in the background. He's ready to talk crypto. Point two. Okay, so we got the CPI numbers down. 0.2 under expected. Risk on assets bullish. Hold up a second before you get a little crazy. Let's get a professional in the building. I just want to sit here and listen a little bit and learn. I want to learn. I need to learn more. So much learning to be had. When I figured out that nobody provides liquidity between Hex and ETH, I was like, there's so much learning to be had. Because we're so early. There's so much to go on. These numbers can get confusing. They're all lagging indicators. Are we in the now? I want to know it all. All these cryptos are going to zero. There's a lot to talk about, and the safety is the top of the list. So let's get straight into it, guys. We got John Wick here. Sam's in the background. Stashes on. Let's get into it, baby.
You already know what time it is.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hacks and I'm making a stay. Got me some heads on, I'm making it rain. Pay me some maxi and that's just in case. Gym ready to set me to show you the way.
D5 Pro. Yeah.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Sam.
So what's good? I'm looking forward to talking to the movie star. Right, we got John Wick. If you guys have never seen the movie,
The
John
math
Wick.
murderer.
Yes, we're gonna be talking Tornado Cash, ETH merge. What's going on with the ETH merge?
I don't know.
Right, so we're gonna be talking about that. We're also gonna be talking about the inflation numbers. By the way, I called this 4 weeks ago about inflation, that they're going to be lower than expected, and that's exactly what came out. So we're going to be talking about that some. How you doing, bro? It is a awesome morning. Just came back from the gym and had an awesome workout. So I'm looking forward to this. I was excited to get on. Hope your show yesterday with PP guy.
All 4 shows. I did 4 shows yesterday.
Rocking out.
Yeah, bro. We were rocking out. We did Poor Pleb. We did Win-Win Finance, and we did the Curve Protocol yesterday. So we did 3 shows yesterday just to keep everyone on their toes. That's what we do here at Crypto in the Morning. I'm just posting a tweet right this second, guys. Sorry, I was a little late on the thumbnail because I suck at thumbnails, guys. And so we got John Wick here. He is a financial advisor. He owns a practice. He is smarter than I. He's been in the market longer than I, and I need to learn.
So
let's see what it says. $5 super chat. Alan Fizz. I've seen a $500 super chat stream before. This is historic. Respect to John Wick. Yeah, mad respect. I lose my mind if John Wick comes out with a mustache. Yeah, I don't know if he had enough time for that. But guys, let's get right into it, Sam.
There he is.
What up?
Hey, thanks for coming on, man. I'm looking forward to this conversation. Looking forward to talking to some other people with a different perspective. So, how are you? Can you tell us a little bit about yourself? And
yeah, so let me start this off for everyone here and myself, because I haven't really had the time to look into your work, but a couple of my friends and you said you enjoyed the show. I wanted to have you on. You're involved in a lot of investment stuff outside of crypto, I assume. You've had a
Yeah.
practice. You're a financial advisor of sorts. Tell everyone about your experience in finance in general so we can get this thing started. Everyone know who you are.
Yeah, absolutely. I'm a fan of the show, so I've been watching, and yeah, love everything you guys have been doing. It's entertaining and informational. So, yeah, just a little background on what I do. Like my day job, my professional work is as a financial advisor, investment advisor. I'm in California, so I'm in the U.S. too. And I mostly help people plan for retirement, plan for buying homes, just general investment advice, insurance stuff, estate planning, trusts. So the whole gamut of financial planning, depending on, how sophisticated the person is or how much they need or how many assets they have. And then also, I'm very passionate about crypto. I got into crypto in 2016 and was an early investor in Ethereum. And then an early investor in Hex and some other altcoins too. So just, I've been very blessed and lucky and grateful to be in the situation where I'm at. And I just mostly attribute it to just education and looking for those opportunities out there. And there's many. It's been a great day this today. The stock markets have been pumping. Hex, Hedron, every Richard Hart asset's pumping today. Inflation numbers were lower than expected, which shot the futures market up. And we're seeing a big gap up today in stocks. S&P, NASDAQ, Russell, Dow, all of them. Everything's pumping. Bonds are even pumping. So it's been a good morning.
So before we jump into the inflation piece, thanks for giving us a little bit of background on yourself and you're getting into crypto and what you do. I wanted to bring this up before we got on the show, but I figured it might be an interesting conversation to actually have on the show. So I've had a bunch of different jobs over the years, and there was something about each one where it was like not exactly what I wanted because I didn't believe it was necessarily the best thing for the customer, right? The end user, not the company, is who I'm beholden to. I want the customer to be successful in whatever it is that they want. And if I know that there's better options out there, I don't really give a shit if I work for you. I'm going to tell them about the better options, and this is what I have to offer. But this here is like a far better option. And when I think about financial advising, and if you believe in crypto, which it sounds like you do, right? Based on your actual behavior, 2016. How do you? For me, that's an ethical issue. Like I can't tell John to do something that is not literally in the best interest of John unless that thing is literally me. But the best thing for John might be to go talk to GRC, and that means you go spend your money with GRC and you don't do it with me.
And I know that deep down.
And I know that, and I couldn't tell somebody to invest into stock or bonds. Like even my father, who's 70 something years old, I can't tell him with good faith to put money into the stock market. So how do you deal with that?
Yeah, it's tough, right? Because you have one side of the coin, which is crypto, which has, ETH. When I first bought it was $10. Today it's $18.50, right? 185 times your money. You're not going to get that in the stock market. 7 years. Yeah, in 7 years you're going to get that in the stock market. I guess it's all about like at least one of the things that we're taught in finance is, everyone's situation is so different. And, Sam, you might have a specific situation, and then obviously your father is in a very different situation. It comes down to like, what is your income? What is your cash flows versus your expenses? What are your other assets? Do you have kids? Do you have a family? Do you have mortgages? What are your liabilities? So there's so many things
that up all the time. And I just want to make one quick note before I let you guys go back at it. I am not a wealthy man. I have zero overhead. Zero, basically zero. I mean, there's like $800 there, but come on, let's be in the United States, 2022. That's like zero. So my moves, so people were at me immediately, and Sam was coaching me, so I didn't have to worry so much, but they were saying, you got to watch yourself. You got to make more fiat. You can't switch up. You got to do this. But I said, I promise you guys, I put myself in this position on purpose because I wanted to try to do something different. So when I make a decision, guys, there's no little niños running around that need food. There's none. There's no car bill. There's none. So it's a different situation for everyone. I love that you highlighted that because I think it's
Yeah,
super important.
that's just to start. And then if you look at risk and reward, obviously the risk on crypto is much higher, exponentially higher, but the reward is exponentially higher as well. So the beautiful thing about crypto is you can put in small amounts of money or a small percentage of your total net worth into crypto and still be able to get financial independence without taking exorbitant amount of risk to your total portfolio. So
couple $100 will change your life.
Some people say 1% of your portfolio should be in crypto, 5%, 10%. That percentage is up to the individual. And you have to know that what Richard says, that it can go down 95 to 99% in a given year. And are you prepared for that? If that were to happen, would you be prepared for that if you put 50% of your net worth into crypto, right? In around 35, 40 cents, and then hex cents. And then you have to know yourself in the sense that what would I do if that were to happen too? Like if it were to drop 90%, would I sell? Would I hold? Would I restake? So I guess stock market is more about like long-term wealth building, safe risk. I mean, yes, safe as from a risk perspective and steady returns. But crypto is where you get the mad gains. It's where you get the exponential growth. You get multiples on your money. And then you can once you get those multiples of your money, you can then reinvest into stocks, real estate, whatever collectibles, whatever you're interested in. But it's just, it's a matter of like, how much you're comfortable with risking, knowing that crypto could go to zero. Things could totally fail.
So could a bunch of equities too, right? Like it happens all the time.
Individual stocks are very risky. Right, just owning, trading, and buying and selling.
But even a portfolio, we're at 8.5% inflation. Like you get 8% on your fucking portfolio, that's garbage, right? You're still losing.
Yeah, you're still losing. Yeah, yep. So with rates, so low, interest rates still are historically very low, even though they've been rising. You have to, in a high inflationary environment, you're forced to invest into risk assets. So from a risk-adjusted perspective, crypto looks fantastic, and that's why. As the more of the world gets more attuned to that idea and gets some of the fear goes away as these things happen, like BlackRock partners with Coinbase and some of these, institutions and all these headlines and famous people are getting into crypto, that just brings legitimacy. But it's just, you guys have talked to people in the real world when it comes to crypto, especially older people. They are very scared. Their first thing is like fear and doubt, and they think it's going to go to zero, or they think it's like a scam or a Ponzi. So
getting over that, like they've been slowly rugged for 20 years and they're just afraid to get the final rug. And they think crypto is going to be the final rug. They might have a point too, because if you've worked your whole entire life, there's a lot of value there just in the fact that you spent all that time there. You don't want to fuck it up. I have done jack shit. I don't care if I lose all my shit right now. I could give a fuck. I'll do it again. It wouldn't be a big deal just because of where I'm at personally. So I think it's when it comes to opportunity cost, some people don't even want it. They just want to survive. They just want to make sure they don't do something stupid. And I think that's where they get stuck, because they're like, oh, this is going to take some learning. And what do we know about things that take some learning? People don't do it.
People shut off. Yeah. People are naturally afraid of different things and new things, right? So like that's another hurdle is they built up an asset, a net worth over their decades of working. They have that sunk cost. Like I put all this time and effort into something. If I were to lose it, it would be devastating. So like they're thinking about it from that perspective versus I can make so much more here. And a lot of people they don't have good advice when it comes to crypto either. They don't. Where do you turn to for good crypto knowledge and information? There aren't many good outlets. There's Twitter, but there's so much misinformation and malinformation on Twitter. YouTube is good, but then you have to know who on YouTube you should be listening to. And if you're listening to the wrong people, you can get wrecked, like going all in on Luna. People buying mortgages using the 20% APR on UST. That's how those situations happen. People put all their, search for yield and put it all into Celsius. So it's like there's so much bad information. There's so many rugs, scams, actual Ponzi's that are in crypto that it's like, how do you separate the wheat from the chaff? That is the challenge. And when you see all those,
do you advise people to put a portion into crypto?
So legally, I'm not allowed to. So crypto is still an unregulated asset in the eyes of the SEC, the CFTC. They're trying to regulate some things like Bitcoin and Ethereum are commodities, but from an investment advisor perspective, we're not allowed to recommend crypto at all. It's unless you're doing it through the proper channels with accredited investors, maybe through a fund or a hedge fund. Sure, you can do it as an investment advisor, but as just a normal financial planner, financial advisor, no, you cannot. So that's another challenge too. But those walls are being broken.
Does it bother you?
No, I don't think so, because to me that still just means there's opportunity in crypto, right? If we're heading to a world where this is going to be fully regulated and everything is all crypto is being interwoven into society and our economic system, then that means there's still opportunity, because there's still regulatory arbitrage between now and then, right? It can only get better.
Can you say regulatory arbitrage for me slower? Not the word, but the meaning.
So it just means that, like, for example, people in Wall Street are not allowed to buy, most people at least, are not allowed to buy cryptos outright for clients or for themselves.
Oh, so not for themselves either.
Oh, they can, but it's like you have to be properly disclosed. You have to go through the proper channels. It's very annoying.
So basically, they kind of just have to look at you and realize you're following the rules.
Think of regulatory arbitrage as like there's a store that's opening, but you get to see the next 24 hours in advance, and you realize that there's 6 sports teams that are all coming to town, and they're staying literally across the street, and this sells like the best stuff for this sports team, and you realize that they're going to come into this store shopping, right? And it's going to drive the prices up. That's effectively what's happening, right? Because John can't recommend literally the best thing that all of his clients should be doing to his clients legally, because then he gets fucked, right? So the system is set up to discriminate against investing in the best asset class there is, right? Also, I used to do financial advising, and I couldn't really tell clients about investing in real estate, even though real estate, in my opinion, is a far better option, right? For a lot of people in doing things, right? You can't do certain things, and that's how the system is set up to keep those people from doing those things. But in reality,
is there any bit of that that's helpful to everyone? Because it's, most people, like we just mentioned, don't want to learn about nothing other than what they're doing job wise. So is there a piece of it that's like, because I don't know, I guess it depends on your wealth and stuff. It's just it depends what people know. It depends what people want as well. Like, I'm sure when you're working with someone, it has something to do with their ideas as well. But I don't know how financial advising works, because I've never ever dealt in that world before. So I'm curious, like, what does it look like? Like, I want to come to you, I want to talk making money, and I want to give you the money to invest with. What does that look like in general? Like, what does that process look like? Not specifically, but just like in a roundabout way.
But let me close the loop first on regulatory arbitrage.
Please, yes.
And then so regulatory, for example of it, is Richard always talks about this, is the grayscale Bitcoin products. So since Wall Street is not allowed to buy it, or for their clients, like outright, like straight up crypto on a ledger, right? That's just like, because you could lose the keys. There's all this liability potential or scam potential. Like if you invested in Luna or UST for your clients, what would happen, right? There's no recourse. You're fucked. You're all fucked.
You're
going to get sued. You're going to get basically
barred. It's so crazy though, because the same shit happens today. Where how many times you see I'm using that term very lightly, financial advisors that just rip off their clients. You've heard of this.
Yeah.
Like, that's why you know what I mean? Like, happens all the time.
There's a lot of bad actors in every business, every space, right? But so with the grayscale stuff, they cannot buy it outright for their clients, but they're allowed to buy GBTC because it's just a ticker and it's regulated and it's registered with the proper channels. So that's regulatory arbitrage, where Grayscale is benefiting from this. Since people can't buy it regularly, they have to go to Grayscale, and then they have to use their products, and then Grayscale charges an annual fee too. So they're just trying to gather assets, because they just make more money the more assets they gather. So that's kind of like an example of regulatory arbitrage. But in the example I was explaining was, you're basically you're buying stuff and assets that are before it's regulated, before it's fully mainstream and regulated, and everyone's buying it on their phone app. So that's what I was talking about with regulatory arbitrage. But as far as financial planning goes, a lot of it gets down to just talking to a person and understanding what their goals and objectives are. And I like to have a specific objective or goal for each portfolio we build. So like, for example, Jim Rat, you might have a portfolio, one for like to buy a house in the next 5 to 10 years, right? And that portfolio is going to be invested very differently than a portfolio that's geared for retirement 30 years from now. And it's going to be very different than something that you're saving for your kid, who might be like 1 or 2, right? You might have opened some accounts for your children. So every specific account has a different goal and objective. And then I try to and then I'll give you a risk profile too. And then I try to, reverse engineer how do we build a portfolio to get to those target returns to then get you to where you want to be, in a safe, wealth building way. And then crypto, other, speculative, I put crypto under the speculative assets. So that could be anything. It doesn't have to be just crypto, but like speculative assets, and venture capital, you basically treat that a lot of them are going to go to zero, but then some of them you could go up 100x, and then it's going to make your portfolio. So that's generally how I view crypto relative to stock market. But I obviously very heavily weighted towards crypto personally, and that's just because.
What would be the ratio? Like 50, 90, 90, 10 for you? No dollar amounts, but like is the vast majority of your portfolio in crypto?
It's higher than I planned, just because the performance has been so great, so it's not like I risked a whole lot initially. I risked like a relatively small amount, but then since the gains have gone so high, and then you keep parlaying those gains into other coins that then have even more gains, then it just naturally becomes a large percentage of your assets. And that's the goal, right, for most people. So you could start at 5%, 10%, 1%. But then if it does what it's supposed to do, and it's going to grow to 50%, 60, 70%, right? So, and then you have to decide there, are you happy with that high exposure of your net worth into crypto? Knowing, can you handle those ups and downs of seeing your portfolio move $1 million in a day, $2 million in a day? Most people can't handle that, right? People will lose their minds. We've been seeing a lot of people in Hex lose their minds just from going from 50 cents to 3 cents. People have gone crazy and backstabbed the community and tried to, do all types of shady stuff. So, it's once money's involved, it's very emotional, and you have to ask yourself, can you handle those emotions?
Are you comfortable with just giving a ballpark of where, like, percentage wise you are? So for context, I closed my Roth IRA, closed my 401k, completely stopped investing 100% into stocks and bonds, but I don't judge. Like, if I'm just curious to see how you're looking at this, because that's not what I do any longer. And I'm, primarily in crypto and real estate.
Okay.
And
yeah.
If you count business wealth, but I'm not really considering business wealth.
Yeah. I mean, I won't share exactly my percentages, but it's definitely high crypto wise.
What is high in the traditional sense, as in like 1 to 5%, or what is high as in like
much more than the majority? Much more
greater
than
the majority.
5%. Yeah. And I mean, I have other stuff too, though. Like I have real estate, I have venture capital, I have startup investing, all types of stuff. What's it called? Opportunity zones. So it's like, I'm in a different situation than most people, I have a lot of diversified portfolio all across. So obviously I want crypto to do well, and everything to do well. But, if crypto does fail, I'll still be fine, so it's, some people, they're trying to catch up in life. Some people are trying to protect their wealth, right? There's a big distinction there. Like our parents might be protecting their wealth, being able to distribute that money in a very tax efficient way in retirement. Whereas us, we may be trying to get ahead in life, beat inflation, and then some. Those two different people are going to have very different portfolios, very different asset allocations, right?
Has a lot to do with your dreams and goals.
Yeah. Exactly.
Like if you want to be the greatest of something, not everyone wants to be. I don't even think everyone should want to be. I don't think that some people should have a beautiful family and do all that shit, whatever's in their heart, of course. But some guys, like self-admittedly, me and Sam, I'm shooting for the stars, baby. And I'm giving it a go. And I'm telling everyone my experience. So yes, my investment strategy, 100% different than others. It comes back to that overhead. It comes back to some of those goals that I have.
I don't know if you have the answer for this or not, but somebody was telling me that it is very challenging to sue a trust. Is that accurate? Do you know by any chance? That's as much
Yeah,
just a selfish.
yeah. I mean, a lot of people build trusts and do asset management with trusts. Because of that, yeah, it can protect you from certain creditors or lawsuit. That's why people create LLCs, right? Is to protect that liability. In case something were to happen to the business, it wouldn't fall back on the person. So yes, absolutely. I do a lot of trust stuff and advising on trusts because obviously you want to avoid probate too in the U.S. Probate's a huge deal. If you're passing down assets to kids, family, friends, spouses, you want to do that in an efficient way. And trusts are definitely a way to do that.
But do you know legally if it can you sue a trust?
I'm not 100% sure because there's so many different trusts out there. There's like domestic asset protection trust, there's living trust, there's revocable trust, there's irrevocable trust. There's a million trusts out there. And obviously speak to your tax professionals, your legal advice. Do not take this investment advice. But yes, I have trusts. I have lots of stuff. And also you were talking about your Roth and 401k and stuff. You can also invest in crypto inside a Roth IRA, inside a Roth 401k. So,
I didn't want
solo
to, but I
401k.
agree.
I heard of that too. And
Yeah.
Tell us a little bit more about that. If somebody like me, when I quit my job, I took my Roth out or whatever.
Mhm.
And I heard of all these other options, but I didn't want to deal with it at the time because I had to communicate with somebody else. So like, how can you, if you have some asset like that at a Roth or at some sort of financial account, how can you switch that over to crypto?
So you could transfer it directly to a Roth IRA at a as a self-directed IRA, Roth IRA or 401k. So you would just do a like-to-like transfer. And then you could once it's into cash, and you have the proper account set up, you could buy USDC and then send it to your MetaMask or Ledger or Trezor, and then do whatever you want with it in DeFi. And it's all inside a tax retirement vehicle that's growing tax deferred. And also once you do retire, it's fully tax free. So I've actually done this with Hex. I did this in 2020 before big payday. So I established a solo self-directed 401k, and you're able to put a lot of money into it, up to almost $60,000 a year, depending on your business profits. But you can do at least the employee deferral. It's like $19,500 a year. So as long as you make that much as a sole proprietor, or if you have a business, self-employed business, you can put up to $20,000 a year into tax-free in crypto into retirement, and then you're solving the problem of taxes in the future and also crypto exposure inside a retirement vehicle. If you don't like stocks, or you don't like ETFs, you don't like anything available there in the stock market, you then have the whole DeFi and crypto world that you can use. And I use Coinbase Prime as my institutional broker, which is the company, Coinbase just partnered with BlackRock. So that was huge news for me and just for the whole space in general.
Let's transition a little bit more into crypto. Some of this stuff is fascinating. I'm sure a lot of people are getting some value out of this, John. So thanks for coming on and sharing your insights on this stuff.
Absolutely.
Let's get into Tornado Cash. We have some interesting stuff. Basically, they're sanctioning Tornado Cash effectively. This is the United States government sanctioning it, and I believe any wallets that have used Tornado Cash. And because the way, from very elementary understanding of this, they're sanctioning the addresses associated with Tornado Cash, but then because you have U.S. entities in crypto like Tether or USDC or wrapped Bitcoin, they can actually force those cryptos to freeze assets that come into these wallets and things along those lines. But I would be curious to hear, your thoughts on this whole thing, because this is absolutely ridiculous, in my opinion.
Yeah, I mean, I hate it that it's happening because Tornado Cash is essentially a public good on Ethereum, and public goods and code, I don't think should be regulated to that degree. I'm sure the regulators will say this is for the greater good. We're trying to stop terrorism and anti-money laundering and stuff. That's always the excuse, right? Like in my industry, We have to do all these AML, KYC stuff, know your customer, and just the regulators don't like, having a lack of control. And this is, to me, a sign of they want more control over not only crypto, but like the citizens of their countries, assets and what they're doing with it, in the name of, protecting you and saving you. So I think it's pretty gross. I'm curious to see what will happen with all the forks of Tornado Cash and what the Tornado Cash application will look like, because there is a project on Pulse Chain that's supposed to launch. That's a fork of it. And then I'm sure there's forks of it on other L1s or even L2s. So are they just going to regulate the Ethereum one, or are they going to do all of them?
Are there people that are laughing at this that are very smart that are like, you can't stop this? Like,
Well,
not maybe not
bet.
your average user, but I feel like Bullish was in the background yesterday, kind of geeking out. Like, he was just like, come on, like, we're VP, like it's almost like to be expected at this point to have to be underground, if in a way.
Well, because I think Bullish, and I don't know, but you can put yourself on a VPN so that you can get outside of the US sanctions probably or something, because you could go to jail and get fined. I don't know what the fine is, but you can go to jail and or get fined like a substantial amount of money for using these. But I think what John is pointing out though is like, how are you going to regulate code? Like some other fucker is just going to copy that shit, and then okay, cool, you regulate that one. Okay, cool, we'll just copy it. And it's there's no cost to the copying other than the person's time to set that shit up and just copy that thing. And you're like you said, I don't think the government is going to be able to stop this. And I'd be curious to hear your thoughts on this, because the next iteration is going to be coming out, right?
Yeah.
Whether
people are still using it right now, right? So like, if you're outside the US, like that one guy was sending dust Ethereum through Tornado Cash to all these publicly doxed addresses, right? He's trying to like fuck with the system. He's basically saying, okay, if you're going to try to shut this down, I'm just going to send all this small amounts of ETH through Tornado Cash to these public people who are very public, who are CEOs and
good idea. I love this.
Publicly traded companies like, Mark Zuckerberg, or all these people, Cuban. Like, what are they going to do to these people that have funds now that were technically gone through a sanctioned protocol? Are they going to, lock them up? Probably not, right? But then it begs the question of, I like that the fact it's very like a cypherpunk thing to do, very crypto thing to do. So I'm curious to see what will happen there. But yeah, like there's going to be iterations of Tornado Cash. There's even a Tornado Cash fork for Hex. I don't know if you guys are aware of that. It's called Hexnado. But there's just not a large enough anonymity set yet.
Hercash is more Monero based, isn't it?
Well, you mentioned a different one. So Hercash is a fork of basically a fork of Tornado Cash, but you just mentioned another one. And there's also an anonymity one, Messy 88, I think, on Ethereum that you could use to, as a mixer type of thing. But you just mentioned a different name. We're not aware of that one, but we have heard of Hercash. Hercash is Tornado Cash on Pulse. What is the mixer that you just mentioned?
It's Hexnado. So it's basically Tornado Cash fork just for Hex. So you could put in Hex instead of Ethereum, and then out the other side, it's anonymous. But the problem with it is there's not enough volume going through it that it's not actually anonymous. So you need a larger anonymity set to be able to make it actually anonymous. So it's like if I were to put in 10 million Hex into it, and then like, a day later it goes to 10 million, goes to a different address, it's pretty clear to see that I was the one putting in 10 and then 10 came out, So you need like hundreds of millions of volume every month, let's say. So it's not there yet. It might exist. It may be more active on Pulse Chain. Who knows? But I'm sure that people, after this news came out, I'm sure people are already iterating in the privacy space and are like, because it's a cash grab. If they build something that people are going to use, they can make a token on top of it, and then boom, you have all this value just created for yourself as a founder of a new protocol.
But also,
not in the US.
But also think about the people that are attracted to crypto. People who don't they want stupid gains, right? But you also don't really care for government. You don't really care for regulations. You don't really care for taxes. And you just come over and you just try to slap all those fucking bitches. What are they going to do? They're going to retaliate because they're far smarter than the government is, right? The government, you're going into government not because in my opinion, because you have this exorbitant amount of intelligence, right? You're going into government because you want to serve and you want to try to do other things, or you just want your fucking paycheck every single week to do nothing, right? Or whatever their person's prerogative is. And there's this giant group of very smart, intelligent, crafty, witty, resourceful people who are going to go through and find another solution to get around this.
Yeah, I think so. I think people will
So
pivot
bullish
very quickly.
mentions right here. This is what will happen. Remember this. Laws will be passed to make coin mixing illegal. They will use all these excuses, but it's purely KYC AML compliance issues. That's kind of where I get at it, because in the article I read yesterday about Tornado Cash, it kind of mentioned something that happened many, many years ago. Like it was mentioning like some Korea hack that happened, and everyone that was reading it was kind of like, is this really why this is going down forever? The way that I see Tornado Cash is like a hammer. You can use a hammer for many different reasons. And they're not going to make hammers illegal. But Tornado Cash is a tool to be anonymous, and they do not want that tool to be existing here. And I think that's kind of just what it is to me.
Yeah, I mean they have the power and the guns and the enforcement ability to do this. And coin mixing could be next. There's Zcash, there's Monero, there's other privacy protocols that could be under scrutiny. And it's just going to be a test of how decentralized it actually is. How is your protocol actually decentralized from a privacy standpoint, or was it just fake DeFi in that sense? But yeah, we definitely need privacy, because it is annoying that if I send you guys money, everything I've ever done from that address, it's just annoying. You can see how much money I have, see like what my staking strategy is. It's just we need a better way of doing that, just as an option.
Oh, don't worry, dude. You get 5 computers and you're fine. Bro, you're good.
Just create a new address every time, and send it from a centralized exchange. That's the best way to do it right now. If you want to anonymize coins, is send it to one exchange and then send it to a fresh address, because Coinbase, for example, uses like only 4 master addresses for all their withdrawals and deposits, or not deposits, but withdrawals, because it's coming from like Coinbase 1, 2, 3, or 4. And then, so you're not, Coinbase has millions and millions of users. You're never going to know who, who sent that address to. So that's one way to somewhat anonymize, but then you run the risk of having your coins on an exchange, which, as we know, is risky.
And then also, if you've ever used Tornado Cash, that's one way they're going to catch you too, right? Because it's like, hey, I broke the law, and then it's like going into the police stations. It's like, hey guys, I broke the law, right? Effectively, what they're saying, because they make it illegal, right? So if you use Tornado Cash and you take that and send it to an exchange, you're effectively saying, hey guys, I just broke the law, and then they'll shut down your account. Do you know of any exchanges that are not, that you can basically use to get around that?
I don't know for sure. I don't know. Nothing that I could say with confidence. But I mean, a lot of the exchanges are no KYC up to a certain amount per day. Like KuCoin is like 1 Bitcoin withdrawal a day with no, just email. Some others are too, but it's like, if you're trying to do anything with size, it's very difficult, because then you're also like, you're doxed, your KYC, they and then, how much are they going to look into your address? Because I remember if you even bought coins from Coinbase, send it to your personal ledger or Trezor on Ethereum, and then you send it to BitMEX, they would block your account. So like, there's obviously, they're looking at like some of the jumps that you're doing to some degree, and they're picking and choosing who they want, that they're not okay with. And that's just an issue that's been with crypto too. Of course, Coinbase is not going to support, margin exchange trading companies as much as they can. And technically, it's not, if you're in the US, you're not supposed to be using it too. So
now, as a financial advisor, where do you see this going? Because regulation can have a double back effect where other people can get in easier with way more money. Do you see some synergy maybe here, where I know it's not necessarily the rules we like to play by, but we're all here for the mad gains? So at the end of the day, if we get enough mad gains, we'd be really stoked on it. So
Yeah.
what do you think as far as regulation? Are they trying to ramp up regulation so they can slide in legally?
Yep. Yep.
Is that really what's going on here?
Regulation has been actually very bullish for crypto over the last 6 years, 7 years that I've been in. You know, it was much riskier back then when I first invested because we had no idea how they were going to regulate Ethereum, how they were going to regulate Bitcoin and all these other altcoins that popped up, you know, all the scams that have popped up. But from a regulatory perspective, they've already said that Bitcoin and Ethereum are essentially commodities. No matter how hard the Bitcoin maxis cry that Ethereum is a security, the CFTC has basically said it's a commodity and it's regulated as such, which is extremely bullish because look at this BlackRock Coinbase news. You think the largest asset manager in the world would partner with a crypto exchange if it wasn't legitimate? Despite there's SEC investigations on Coinbase currently there's investigations, but they still partnered with them. So they know that the regulatory scrutiny is only time, it's temporary. They're trying to figure out a game plan to how to make it most efficient, and then also how can they make the most money off of it too as it becomes mainstream. So BlackRock obviously isn't doing this as a charity. They're not partnering with Coinbase for the goodness of society, for crypto to be mainstream. They're doing it so they can actually entrench themselves, get fees and assets under management, and then they can make money off it while the regulatory arbitrage still exists.
John, BlackRock has, around $10 trillion of assets under management. And the traditional sense, as you alluded to earlier, is 1 to 10%, depending on the prerogatives of the person. If you're coming from that world, right? Like I do my own stuff, and I have a completely different set of rules of thumb, right, for how I run my shit and how I think people should run their shit. But if you utilize that for what they're preaching to their people, 1% of $10 trillion is $100 billion rolling into crypto over.
It's liquid.
I mean, Bitcoin, right? So they mentioned, I think, at least the release that I saw specifically to focus on adding Bitcoin to portfolios. But if you look at Bitcoin, right, probably now close to $500 billion. That's 20% just into Bitcoin, right? In terms of market cap, think of one deal could add $100 billion to the market. That's a lot of fucking money running in. That's very, 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 very bullish for crypto.
Yeah.
Quick super chat real quick. Let me just read it out and get this question answered. With Tornado.cash, what are our options for privacy on Ethereum-like networks? Sending it through exchanges, as you mentioned, and crossing your fingers?
Messy 88 is another protocol. I don't know if they've launched or not, but you can check out them. But as John mentioned, you need to have a big enough set of users to really. I mean, if you're doing something, say less than $100,000, you could probably use that protocol. But if you're getting to larger amounts of money, you're gonna have to figure out other solutions, or just it's gonna take you a lot longer period of time to do it.
The problem with using newer protocols too is just the smart contract risk. Tornado Cash has been tried and true because it's been used by millions of people or hundreds of thousands of people already, and it obviously works. These new protocols, you do not know the developers. Have you actually read the code? Do you know how are there admin keys? Can they basically take your money while it's being anonymized? These are all risks. And are you willing to take that risk with X amount of your capital just to anonymize it? So there's trade-offs for everything. And it's not like you should just anonymize everything and just, jump into the next anonymous protocol.
Well, as you can see from the people that did, they got in a lot of trouble.
Yeah, or you could get in legal trouble too, depending on your jurisdiction. Yep. So there's a lot of risk out there, and it's the best thing to do is hold it, obviously self-custody your stuff, do multiple backups of everything, and try not to touch any contracts that may be malicious, and then also revoke your DApp connections too. You can do that. That's a good thing to do, especially with apps you don't use on a regular basis. Go to hex.com is fine, right? Because we know it works. The Hedron app seems fine, but some of these other protocols, I do not trust keeping them connected to even if it's on a hardware device. But yeah, that's the privacy thing question. It's hard. I don't really know too many other protocols on Ethereum to run that I trust at this moment.
I think this conversation has been super fascinating, John. I'd like to transition a little bit into inflation. I've talked about this previously, how you have like the USD value relative to a basket of other currencies, including like the Chinese currency, gaining value over the last year. So like the euro, dollar, Canadian dollar, Australian dollar, British pound, the Chinese currency. And when you look at the macro picture, the U.S. has historically every quarter been in a deficit. So for people who are listening, that just means that we buy more shit than we're selling to these other countries. So as a country, we're importing more stuff, and that makes the stuff we're importing cheaper, right? So we saw this thing like playing out, and you're like, okay, yeah, inflation numbers are going to be coming down. Plus, you have like company after company after company after company announcing layoffs. People are reducing spending, and then the numbers come out. I think today or whatever it was earlier, and we beat. I want to say beat, yeah. So we still 8.5% inflation on an annualized basis. And what are your thoughts on what's going on right now? Do you see the inflation numbers continuing to trend downwards over the next year or so?
It's a good question. It's a question that everyone wants to know. It's a very difficult to decipher because we don't have access to all the data that the Fed does and the powers that be do. But a lot of the inflation numbers has been reflected in energy sector. Has been the highest inflation, and that's come down, right? Since they've raised rates, oil's come down, commodities have come down, even rates have gone down, which to me signal like on the 10-year Treasury is the typical one that I'll look at.
Mortgage rates too.
Those are coming down, even though they're raising the Fed's raising rates. So the bond market is essentially saying that we think you're going to raise rates, to try to curb inflation for the rest of 2022. And that's perfectly normal. That's what the market is expecting. And that's why we've seen a strong bounce. Is basically, they said they're going to raise rates, but they're going to very carefully. When initially, when we were chopping, when we were near the lows around May and June, people were thinking that we were going to go like astronomical. But them saying that they're going to be very cautious with it was very bullish for the stock market. And then it's been very bullish for Ethereum, Bitcoin, and other cryptos too. But my suspicion is they're going to start actually lowering the rates. This is what the bond market's telling us, is that they're going to start lowering the rates in 2023. And if they raise them just to keep demand, to tighten the money supply and keep demand down and energy prices down potentially, but then they're going to slowly start to decrease them again next year, that's when we would be back onto a risk-on environment, full-on risk-on environment as rates drop again. And then as the interest rates are dropping, you're even with inflation still going to be relatively high, I assume. And those 8.5% numbers are relatively, I would say they're on the low side when it comes to real life inflation. So that's just the numbers they tell you, but just trusting the numbers they tell you outright is usually a bad recipe to follow.
Especially if I make the rules, and I give you the data and I tell you this is the accurate data. You just have to trust that I'm fucking telling you the truth. And if I make all the rules, you can't I'll just change the effing rules so they're right. And that's what effectively happens with inflation.
Right. And everyone thought that it was going to be higher. So we technically beat the numbers that what was expected in Wall Street. And so when it was basically like when the stock has a earnings announcement, and then the earnings turned out to be better than expected. Expected. That's kind of what we happened today with inflation. Is people thought it was going to be this number, it actually came in lower, which is bullish, and that's why the futures market this morning started pumping on that news. Right as it happened, the S&P pumped up like 2%. So clearly, a lot of people in the stock market and the bond market, they're reacting to this news very favorably. And then as a byproduct, as a leading indicator, Bitcoin and Ethereum also rallied. And the rest of the crypto markets are all rallying now. So,
do you think so? I thank you for bringing up commodity prices. Like several different commodity prices have come down drastically. Crude oil has been coming down. Interest rates have been coming down. We have people cutting back on their spending because they're spending $5 a gallon on gas, right? And gas prices are coming down just like marginally, but they're still double what they were 2.5 years ago. And you have the dollar gaining in value. I have the same belief that I think possibly by the end of this year, we flip to an expansionary policy. I don't think that they're going to continue to raise rates even throughout the rest of this year. I don't think they're, based upon like what we're looking at now, just doesn't seem to be the case that they're going to continue to raise rates. What are your thoughts on that? I think it's going to happen. I think they can flip to an expansionary policy.
This is what I kind of want to get into as well, because it's just like I don't have enough nuance insight on that at all. Like, what are they willing to do, and what are the trends allow that? Like, what can you see? Just like Sam said, that's what he saw. What do you see? What do you see? Like, what is your feeling?
I see them raising. There's like 3 more opportunities, like meetings to announce this. So my expectation right now in this moment is that they will raise them 3 more times, maybe a half, 75-ish, but probably not 1% at a time, to end the year. But if it comes into anything lower than that, that would be bullish, right? And if Sam's right, if they do start to decrease it or not increase it, then that would be great for the stock market and cryptos in general, right? If it does. But what I looked at is the bond market, and the bond market is telling us that they're going to raise them for the rest of the year, but not that much. So that's what the bond market's telling us. And the bond market's the largest market in the world. And there's the most money splashed around there. So those guys usually have a finger on the pulse better than a lot of stock traders, equities traders. So that's what I'm seeing. And once they start dropping rates, that's when I think we're back on a full risk on environment, and then the stock market should do fine. This has been a very deep drop for the stock market, but like if you zoom out, it's just correcting from a major pump, since COVID. So technically speaking, like the chart looks great still on the stock market, and crypto's not as much, but with BlackRock joining the fray and with all these other institutions joining the fray, I don't see Bitcoin and Ethereum bottoming out. Like we could see 11K, but I see more of a 13 to 15,000 bottom potentially. And this could just be a bull trap, right? If this bounce in crypto, like you can have huge ripping bull bounces in a bear market.
Even like a 40K Bitcoin, like would that surprise you? And then back down to 11? It would. So 40K would get to that point where everyone was getting a little bit. Where is that value prop for you, Sam? Where you kind of see, it's just like it gets too sticky, right, at some numbers, and it gets too high at some numbers. Where do you see like a top out, like a fake out little? What do you see in markets? Like what could go up? It can always go up. That double top showed us a lot, I think, too.
What John was saying, like about the markets and everything. I don't have as much experience in the crypto market as I do in the legacy. So when I'm talking about like trends in the crypto market, it appears, right, this is from people who have more experience than me because I haven't personally seen this, that bear markets in the crypto market tend to last, maybe a year and a half. And if you look or you define the top as in like when BTC hit the top, we're over a year, right? Because I think it was last
November,
April.
November.
November of 2021.
Yep.
So
let me pull it up.
Cool. Thank you. That would be great because I don't know.
And before we get off, which will be in 10
November.
minutes, at the end of that,
2021.
There's a lot of questions in here about your thoughts on a few of the assets that a lot of these hexagons hold. And I'd like Sam's thoughts too. And we can just, I guess, jump right into that unless you got something else to say. There's a Hedron Pulse D debate, and there's a lot of fiat going into both of those things. I had a show the other day where I said I sold all my Pulse Doge and I bought Hedron. And it wasn't at that moment, but that's just what I did in general. And that was my take. What's your take on maybe, let's just use those two for an example, Hedron and Pulse Doge? Two assets, they're totally different. Which one would you rather, or which one, do you have faith in either? Have you invested in either? Or you don't have to say specifically, but what are your thoughts on those two assets?
So I've been I've been talking to Alex, who created Hedron, for a minute, and yeah, I respect what he's been doing, and I was basically tracking it right when it was launching, before it was launching, just to understand the game theory. And obviously, when you have a free airdrop, you naturally just want to look into it more, right? You just want to learn more, because Alex gave us all tons of value, like huge amounts of value. So appreciate everything he's done. And I think this recent news about the ICOSA contract launching has been helping the Hedron price. Obviously, it was way oversold. It dropped like 95% sooner, earlier than Hex did. And a lot of the potential dumpers, or the people that would be dumpers with their 10x minting, they've dumped already. And now we're seeing a huge reversal there. So, I mean, Hedron currently is sitting in the OA bid wall. So there's a lot of liquidity available for people if they want to buy a lot of Hedron, essentially.
It's almost like you can build a stronger position. And that's where I like to, like, it feels like to me, because I felt we dipped too low, just a hair. A hair. And then I felt like the premium would come back up to launch date at some point, just like it would just even out there. So I think this pump has two reasons: the ICOSA news and the oversold news, and the fact that new guys can probably get positions that might be a little more favorable with a user, with a founder who's 100% transparent. I mean, I've never seen a guy like him before, because he's not like one of these guys that likes to wear fancy stuff or none of that shit. None of that. Like, I don't even know if he knows how to do that. If he had $100 billion, he's just not that type of guy. It doesn't seem like. But he is like so focused on his work and updating everyone all the time, and it gives me that little feeling. I do a lot of founder research. I love to look into the founders. And then we go over to Pulse Doge, where I get fucking harassed all day fucking long. And it's just like, dude, I can't support something that I don't really trust. And for some reason, there's some trust in my gut. That's my point for Hedron. That's my point, Sam. I'd love to hear yours.
Well, I would like to touch on this comment here, okay, on this, because I'm curious to hear what you think, John. I think that there could be more of a sell-off. We touched on it just briefly when we talked about the Bitcoin top there, and I don't know. It depends on if people consider the top being, they considered like a double top, or whatever the fuck you want to call it, back in April, I think it was 2021, and then the 69 was in November, I think you mentioned.
November
2021. So like you mentioned, $15,000 to $13,000. What do you think are some of the ideas or things that can create a catalyst for that big sell-off, right? Because we have a lot of bullish stuff coming out with, the Coinbase thing, and the merge, the inflation stuff, right? Like, we have positive things happening right now. So what do you think could be some of that catalyst that kicks the legs out from underneath this, and we see a sell-off?
Well, of course, geopolitical risk. There's potential for China invade Taiwan. And then there's a whole World War III risk there. There's the Russia-Ukraine stuff. But for the most part, I think it's just if the stock market rolls over. If this is a dead cat bounce on the market.
By roll over, you just mean like physically roll over, like the chart rolls over?
I'm not saying that it is a dead cat bounce in the stock market. I'm saying if this bounce right here, because it was very oversold and then it bounced. It's bouncing hard, right? It's wrecking all the shorts. I got in short late. So if the stock market rolls over, and it's basically the leading indicator for Bitcoin and Ethereum, Bitcoin and Ethereum are tracking the stock market to a T almost. Every single time, if it's up, they're pumping. If it's down, it's going down. So if S&P 500 were to drop another 20%, I think cryptos could drop another 50. And then that would take us right now to Bitcoin at 12,000, ETH at 900, 800 or so. Hex maybe at 3 cents.
I'd throw up,
2
bro.
cents.
I'd throw up.
Potentially. So I think that the stock market is going to determine a lot of what happens to crypto. But based on past performance and past bear markets, like Bitcoin's at 24K right now, and it was at 70K in November. So 10 months ago. That's clearly a bear market historically. But the question becomes, much of this dumping in Bitcoin was due to the Celsius and the Luna stuff, and then Three Arrows Capital doing forced liquidations, Celsius doing forced liquidations, the staked ETH contract being depegged, and people having to sell ETH to cover their staked ETH plays. So that's the question that I have. And it's probably impossible to know how much of it was just forced selling versus real selling. But like Bitcoin still only at 24K when the stock market's ripped like this on this bounce, it still seems like to me it's a bear market. Assuming that Bitcoin is still leading the way, and basically whatever the crypto market does is what Bitcoin does, right? Then we definitely could see more downside. I think that's something you could be prepared for, but you don't have to plan your portfolio to expect that. But if it is, I think people should be prepared. If that were to happen, what would they do? And I could just start game planning now. What would I do if everything were to drop 50%? What would be my strategy? I think you could go from there, but a lot of it is still up in the air. No one has a crystal ball.
That's I like that exercise of what somebody might do if there's a 50% drop. If you guys take that real now, then as you go into a bear market, it's a great exercise to continue doing, because you can start positioning yourself. Like if you're asking yourself the intelligent questions now, you can get better answers from that. Mm-hmm. Like one of the answers that I want to get from John Wick is his thoughts on the merge. And we only have a couple minutes left here, but we have the ETH merge. We have staked ETH that's going to be tied up for 6 to 12 months is their estimate. I mean, if it's 6 months, they're probably going to be 12 months based upon all the delays we've seen. But what are your thoughts on the merge? Soft date is like mid-September, and how do you see that affecting everything?
I think the merge is extremely bullish for Ethereum, and then all of the DeFi assets that live on Ethereum due to Hart's law, right? So Hex holders benefited greatly and still benefit from being on Ethereum. And it's one of the best design decisions that Richard made when he launched Hex, was launching on Ethereum, because we had the DeFi summer of 2020. ETH went from $85 to 5,000. We did even more than that, right? So you just basically ride the coattails of this, basically the best blockchain. So the merge specifically is going to be a supply shock as far as the new inflation being minted. So it goes from like 4% or so to like 0.4%, which is like a 90% decrease in new inflation. And then you're going to have supply being locked up through the staking mechanism, which is locked for an indefinite amount of time. We don't really know yet. So that's going to take more supply off the market. So the new inflation is decreasing to almost zero. A lot of the staked ETH is going to be staked, and it's already locked up in a lot of like DeFi smart contracts. So from just a supply demand perspective, the supply is going down drastically. As long as there's still demand for DeFi and for Ethereum and all the cool tools that we have available to us, then, and all the institutional awareness Ethereum now, and BlackRock has said that they're going to first do Bitcoin, but they left open the door for other assets, which you would assume Ethereum is next. So I don't think, if they're capitalists and they're in it for the money, they're not just going to offer one product to their clients. And I'm sure that institutional investors don't want to just buy Bitcoin, right? They want Solana. They want, as much as we don't really love those projects, they want Solana. They want Cardano. They want Ethereum. They might want to have staked Ethereum through an institutional platform, right? They want to earn yield on their asset that they're going to hold anyway. So I just think that the ETH is extremely bullish. I think it's going to outperform Bitcoin moving forward. The ETH Bitcoin BTC ratio should continue to trend up, just because I think it's just a much superior network, and it has much more features and access and yield generating opportunities, not just Hex, but yield generating opportunities and yield farming and LPing, where everyone can make so much money. Even in a bear market, you can make tons of money, LPing and doing limit orders and doing all these cool strategies that are available. So I just think it's a huge bullish catalyst for the space in the short term. We'll see if the bear market will override bullishness, or will ETH just decouple. That's what I'm looking at for the next 6 to 9 months.
That's the biggest risk I see happening is some black swan with the merge or something. That's the biggest risk in my mind taking place. John, I appreciate you taking the time out of your day to come on and share your insights and your experience with us and with the community. It's been awesome. I'd love to have you back on and chat more in the future. GOC.
Yeah, this has been absolutely fantastic, guys. Thank you so much, John Wick, for coming on and introducing yourself to us. I'm so glad you came on.
My pleasure.
And you closing words? Like, how do people reach out to you, bro? Like, how are
can you drop something? Because I got people in here on Telegram that want to at least give you a what's up. Is that, or if you don't want to drop your Telegram, you don't have to, though. Yeah,
my Telegram, and I'll send it in the private chat. It's just at Golden Yacht on Telegram if you want to DM me or ask me any questions. I'm also
put that
in the Hex Crypto chats, trading, Hex Pro. I'm in the Pulse Plan. I'm in a lot of the game theory chats and also just like the text chats. So if you want to reach me there. But I don't have anything to shill you guys, so that's pretty much it.
Oh, my God, you piece of crap. You better come on here with. I thought you paid me before you came on here, bro. What was all that money for that you get? No, I'm just kidding, guys. Come on. This show. There's no bribes. There's none of that. If we have a good product, you're going to hear it from the rooftops. So,
I will say one thing regarding Hex is pretty cool. Is people should look at the liquidity of Hex. Right now, the bids are 2-to-1 ratio of bids to asks. In size and I think amount too, there's just way more bids. So if you look at the 0x order book, metric.exchange, I sent the link to you in the private chat, and then also the V3 USDC pair is where most of the trading volume happens. If you look at that, that can give you good insights into where we may be headed, because where the liquidity is where all the trading happens, and then if you know where all the liquidity is, you can kind of understand where people expect the market to go. And then
what's the resource? I looked in the private chat. Maybe it came in here before.
I'll resend it.
Thank you. Curious to
There's
check
the
out
metric.
Next. Thank you.
You probably weren't in the group yet. So the metric exchange is the 0x order book, which is mostly the Uniswap version 2 bids. So that's just like people setting bids and asks on Uniswap v2 and like 1-inch exchange and Matcha. The Uniswap v3 is the ones where you can do the one-sided or double-sided liquidity, and that's also essentially limit orders on both sides of the book. So as you can see, there's not much sell pressure as far as asks on the sell side of Hex right now. There's a lot of bids sitting lower, it's like 4.5 cents, 5 cents, and then because a lot of people were expecting sub 1 penny Hex, sub 2 penny Hex, when it was around 3 cents, 4 cents, right? A lot of people were calling for that. So I think a lot of people got trapped with USDC bids lower, and they're either now forced to buy higher or move their bids up. So I think that's what's causing, Hex is looking bullish, and obviously the rest of the market's looking a little bullish too. So I think that's a pretty cool tool to look at for either trading Hex, or if you're just looking to get entries, you can see where other people have their bids and you can front run them, or you could try to,
Is there a way? I was looking at some of this on V3 yesterday, and I would love to be able to like download this shit and fucking play with it in a spreadsheet, but I wasn't sure how to do that because I didn't see, hey, you can export this in some way. I would love to be able to pull the data myself. I'm sure that somebody smarter than me in this realm of things could tell me how to do that, but I don't know how to do that shit. If you guys know, hit me up.
I don't. A cool resource for viewing Uniswap V3 positions. So if, like, for example, if I see a huge Hex whale doing LP positions on V3, I'll type in their address on revert.finance. I'll type it in.
Thank you.
You can see a visualization and like stats and the data on all their entire position. So they're like, where's the bid? Is it between 5 cents and 10 cents? How much of it has been filled? How many fees have they generated? What's their impermanent loss? What's their what pair is it? So it will show you the whole addresses, active positions and closed positions, which is really cool to analyze some of the bigger players in Hex.
I love that you can move in crypto and learn at a rate that is just nonstop. If you want to, like you could keep going and learning and getting more information on all the buys, every buy and sell that goes on. There's a lot of information you can extrapolate from that. And I really appreciate that insight. That's amazing. Thank you.
Yep. There's a lot of Hex has the most tools at the blockchain and look at all the staking data. Because, like, for example, I can look at the future staked expiring chart and see each address and the largest stakes whose stakes are expiring, and then I can do analysis on those addresses. So, for example, someone has like a 10 million Hex stake that's 1,000 days old. I can look at that address on Hex.vision and see, okay, what other stakes do they have? Are they a net seller or net buyer? What do they normally do with their stakes when they expire? Do they sell interest and restake, or do they sell it all?
We
there's all
should,
this.
John, we should have you back on and just go through resources, because crypto is fucking dope, right? We all agree with that. But as you walk through your journey in life, but also in crypto specifically, everybody's got different resources that are available. And I think for this is 100% selfish, but also I think it would be tremendously valuable to people who watch and listen. We should have you back on, and we should just talk about different resources for finding fucking cool shit, because that's one area that is there's not like a great resource to just, everybody's got their own little tools, right? Like I have little things that I do, you have little things that you do, GRC has little things that he does, and kind of like pontificating, brainstorming about this stuff, because I don't think there's anybody else doing it. I think it'd be tremendously valuable and interesting to come back and just share and talk about a whole episode of just about cool different resources available and all this kind of stuff that we each have to like look shit up or find information, because then other people can see this information as well. And the information gap in crypto is gargantuan,
Yeah, I mean, I'm down. I just think I just love the Hex, all the data available to us, because it's like the crypto has that much information readily available to the public on staking, all the share price stuff, you can literally create behavioral profiles for addresses, and notes on them. You can say like, this guy's a dumper, or when his stake expires, a dumper, but he's, you can everything. You can say he's got like $1 million left in USDC and he's buying in 100,000 batches. You can see that, and then if you see that happening on chain in real time, you can front run it either way to your benefit, right? If you see,
you also get narratives of people that do the same things over and over again that people haven't been in the cycles for, and you know what I mean. Like there's certain people that do certain things all the time, and they say the opposite right before they do it. And I think it's important to understand that. But like Richard said, Hex has more data on the analytics online available than any other cryptocurrency in different charts and different websites, all funded by the people in the community, mostly for free, probably, as far as Richard's concerned. So I think I love Hex. I really fucking like Hex a lot, really a lot, an extreme.
Yeah, that's great.
And awesome. It's guys, I think we're all in a good position. I think we need to stay strong. Emotional fitness is the most important when you're going through this, because if you're an emotional mess, you're going to sell your bags to fucking John Wick. And that's the 100% truth. It's how it works though, right? It's like I was talking to Mr. Fiat Buck before this, and he's like, the best moment in my life is when everyone sold me a 98% dump on Hex and I knew it was going back up. He's like, everyone sold me their shit. I bought all of it. And I was like, and he said from that moment on, you're just getting money from other people to a degree as well. So it's important, the emotional fitness and understanding what's going on around you so you can be prepared. When Richard said there's an 85% dump coming, he was not fucking joking. He said it every stream, every single stream, 85% dump, 85% dump. And then when it happens, the guys that aren't emotionally fit sell their bags. So I think emotional fitness, that's why I loved when I was rewatching your video with Crypto Stylist, you were mentioning that a lot about emotional fitness and about the markets.
Yeah, it's all psychological, right? Investing is like 80% psychology. And usually what's best to do is usually the opposite of your emotions, right? Like I had a lot of onboards when it was around 3 cents, super emotional and butthurt. And like, they're like, I'm afraid to buy here. They're like, I'm afraid because it's going to go, it's like those emotions are usually the indicator to do the opposite of what your emotions are telling you.
People love to buy 50-cent Hex. They hate buying 3-cent Hex. They hate it.
Like when you're screenshotting your profile to everyone, that's also an indicator to start selling some, right? So it goes both ways. You get greedy on the upside, you get greedy on the downside, and you also get too fearful when it's down. You get too greedy when it's up. So
We need
you
to
gotta
wait for
know-
everyone to not want crypto anymore. Like, I feel like people still
Yeah.
kind of want crypto, and I'm waiting for people. I'm waiting to go to the gym, and nobody brings up anything about crypto.
Right. And if Bitcoin dropped to 12K and chopped for like a year, that would happen easily. Everyone would get bored and then just write it off. And that's what happened 2018 to 2019. Everyone wrote off crypto. ETH went from, $1,500 to $85. You could have bought so
I
much
would
ETH.
love that.
That sounds a lot like a
great.
$500 to $900 ETH now.
Yeah. And then if you extrapolate to the next bull run, ETH could hit 25,000, 30,000 easily in the next bull run, especially with the merge coming, right? So you just look at what it's now versus what it could be in the next bull run, and that's where you can see what your potential ROI, your multiples might be. And then you got to find the coins and the projects that have that. There's no guarantees, but what has the potential to do that? Is the question I ask myself a lot.
This has been amazing. We're gonna jump. We haven't had this long of a show in a while, and that's a good sign. That's bullish on John Wick, guys, because John is the man. But I'm doing a show with Just Ask Jesse in 25 minutes, guys. So be ready for that. He's gonna come on here for an hour. We're gonna chit chat. There's a lot of rug pulls going on. Curve protocol. He knows all about that shit. So we're gonna bring him on and talk. And I really appreciate you coming on here, guys. If you have not smashed the like already, do me a favor, go down there and smash that like button. Hit the subscribe. I'm live every single day at 11 a.m. Eastern, guys. Peace out. What a great show. Everybody have a great day.
See you guys.
Young folks, you tripping on them motherfucker.
Richard Heart. Richard Heart.
Bought my hex from the fucking start. .1 every day we mark. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard Hart. Got paid on big payday and I had a hair restart. Now I'm checking on my pulse just to check my heart. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard Hart. Got paid on big payday and I had a hair restart. Now I'm checking on my pulse just to check my heart. Checking my MetaMask moving. Look at the hex, he is mooning. Looking at wives they be choosing. Peter is why they be losing. Pull chains out and they'll get me a check. He's gas up and it got me a mess. Remember the times he died collect. Hex I been eating, I'm dying in the best. Getting this back like a year ago. Getting this post, I ain't letting go. Swerving the ring like a Lambo. Getting this back like a year ago. Getting this post, I ain't letting go. Swerving the ring like a Lambo. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard Hart. Got paid on big payday and I had a hair restart. Now I'm checking on my pulse just to check my heart. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard